Welcome back to Upside Down Data. Let's talk about HBAR and where it might be heading next. So if you're not familiar, Hedera Hashgraph is a layer 1 protocol. It uses a novel consensus mechanism. It's organized as a hash graph, which is different than a lot of other layer 1 blockchains that are basically a chain of blocks going together. Think Ethereum. And one of the benefits of Hashgraph is that it's very scalable, allows things to be very quick and very cheap to use. And then, of course, being a layer 1 protocol, it's a place where people can build applications on top of it, decentralized applications. So that's a general ballpark that Hedera Hashgraph is working in. A lot of the reasons why people like it is some of the novel things it's done around its Hashgraph architecture that sets it apart from some other assets that are in the crypto space. But let's talk about its price. So that's what we're going to talk about right now. And one of the things that I think is notable about HBAR is that a lot of people had really given up on it or left it for dead. It had gotten absolutely hammered in the bear market into 2022. It then started to level out here in 2023, and it did rally into the beginning of 2024, but not as impressively as a lot of other assets did. And then it started correcting relatively deeply. People capitulated. I saw a lot of people who were really staunch HBAR supporters decide to get out at right around these levels. And then, of course, that's the point where it goes and shoots up. And this is often the case in markets, that when the majority gets too extreme on one side, it will go the other way. And that's indeed what we saw here. So I want to talk about what some of our models have been seeing with HBAR and where they see it going next. The nice thing about a model is that it's not beholden to the emotions of the crowd. It doesn't care if the majority of people are giving up on it. It just cares about the data and what is objectively correct from its estimation. So let's go ahead and get into it. So this is our short-term upside downside potential indicator, or UDPI. It's a risk model that we have here on the channel. High values mean high risk, low values mean low risk. And one of the things that you'll notice about the short-term UDPI going into this recent run is it got pretty deep into the lows. In fact, down to similar levels that have acted as springboards in the past for at least some amount of upside. Now, in the bear market, the amount of upside tends to be relatively capped, because people are going to sell any pump and then they'll just dump down again. But then in a bull market, it's the exact opposite, where when you get into those really deep levels, those can be really nice opportunities before the next leg up, the next higher high. When you look at HBAR's price history, it really is a series right now of higher highs and higher lows that is being established. That is the definition of an uptrend, a bullish trend that has been continuing for HBAR. So when sentiment got so extreme that people thought HBAR was just going to keep collapsing, it was never going to do anything, and you see short-term risk this low, that's actually a pretty strong contrarian indicator that something might be brewing, and that's indeed exactly what we've seen. So now we flip over to the longer-term view. So this is our long-term UDPI, which cares about moves that play out over months to multiple months, so much longer in its time horizon than the short-term UDPI. We can see an interesting story developing here, where we also did dip down on the long-term risk here. But now that we're going up, it has not moved up nearly as aggressively as the short-term UDPI. You'll notice the short-term UDPI is actually getting back up to levels that have acted as either local tops or close to local tops in the last couple of big rallies. And so this might suggest that the short-term upside is getting a little tapped out and that we might need some time to cool off. But the good news is that the long-term UDPI has cooled off down just above -2, basically down here. And now it's starting to move up again, but a little bit more slowly. And so what that might mean is that HBAR does still have a decent amount of longer term upside potential to realize from these current levels. Even if it might have to take a breath in the not too distant future, there still seems to be reasonable upside potential in the long term remaining. And so that's overall, I think, a bullish outlook. So obviously we've already chewed up some of the short term upside potential. That's obvious. Of course we have. But then in the longer term, we still have a good amount to run. And that's just talking relative to this peak here in risk, to say nothing of getting to these higher levels in the scale, which are certainly not impossible, especially in a stronger bullish impulse. So another model that we can look at to get a better sense of the longer term outlook for HBAR is our momentum bias indicator, or MBI. So this is a model that looks at, as it suggests, momentum, and is it biased to the upside, prevailing to the upside, or to the downside, prevailing to the downside. It's a z-score. 0 means the average momentum in the market, and then standard deviation units above and below. And one of the things that you'll notice with the MBI, not just for HBAR, but frankly, every asset that you look at, you go to our website, PolarityDigital.io, we have all of these charts for HBAR and more over there. You'll see this pattern play out over and over and over again with different assets. In a bull market, you spend the vast majority of your time in the green, with only brief times down in the red. In a bear market, the exact opposite. Vast majority of time in the red, with only brief attempts to reestablish positive momentum bias. But then one of the most interesting behaviors on the MBI is what happens in these transitions out of bear markets into new bull markets. What you'll see, and again, this is not just for HBAR, this is for Bitcoin, this is for Ethereum, you see it across the board. You'll see this oscillation around zero. You'll see that this kind of down-only behavior ends, and then this is that indicative sign of that accumulation zone going into the next bull market. And HBAR has been playing that out perfectly. And I've talked about this before. Months ago, I was talking about this, how with HBAR, you can just see that behavior showing up. And indeed, we're just continuing it. We're oscillating around zero, with maybe now the upside starting to outweigh the times in the downside a bit more, suggesting a building up to maybe a stronger part in the bull market. That we'll have to see. We could just continue on this oscillation phase for a bit longer, but that's a bullish sign. And oftentimes when you see that, price will either be going sideways or slowly up. And that's indeed what we're seeing now. So when I look at the MBI, not financial advice, of course, you make your own opinions. When I look at it, this is very indicative of early to mid bull market behavior that we're in right now. I don't see much sign for concern right here. Frankly, even when everyone was getting doom and gloom here, there's very little to be concerned about from the MBI. This is a very expected dip back below zero. And then assuming that you got this reversal, which we did, everything's fine, basically. You're still on track for that bull market thesis, and that's indeed what we've been seeing. So that's our MBI. That still paints a bullish picture. And another model that we can look at that I think is very clear in the implication that it's giving is our forecast model. So the forecast model estimates the probability of upside 6 months in the future for an asset at a given point in time. And so basically it ranges between 0 and 1, and then the likelihood of upside is just the that decimal. So 0.96 would be 96% chance of upside in 6 months, for example, whereas if you're all the way down at 0.1, that would be 10% chance of upside in 6 months. And you see how well this has captured the dynamics with HBAR. You're really bullish in the bull market here, leading into the bull market, then really bearish, even as HBAR is hitting a new all-time high, getting really bearish because it saw things were not looking great in the future. That the forecast, the outlook was not looking great, and that's indeed what we saw. Then as we got down into the doldrums of the bear market, it started getting quite bullish again. You'll notice it hit 80% chance of upside down here. Then it only got more and more optimistic, and that is now playing out, that this optimistic viewpoint has been correct this entire time. It didn't feel that way, and a lot of people have been very doom and gloom on HBAR, but has now gone ahead and broken above the highs it put in 2023, broke above the highs over here in early 2024. It's now moving back up towards this range that we've only seen in the prior bull market. And that's where if you just look at the data, they tell a story, and it's much more useful to watch, in my opinion, than emotion. Just remember, back over here, everyone was losing their mind. Everyone in HBAR was saying it's over. In fact, you even saw people petitioning the governing council of HBAR. That's basically a group of institutions and companies around the world who serve as the main governance body for the network. You saw people petitioning them to boost the price of HBAR. I can guarantee you this is not that, by the way. This is not those people just suddenly buying HBAR because of that petition. First off, there's no way that that is what happened. But it shows you something about sentiment. When you see that extreme desperation by HBAR holders, there's so many people giving up, but then doing it in the face of bullish data, that's a pretty strong sign that being a contrarian might make sense. And that's indeed exactly what we've seen here with HBAR. So that's the current outlook, but there's another thing that I think is important to mention for context when you're interpreting all of these data about HBAR. And that is, let's go ahead and flip over to this chart. I'm going to hide these here for now and just talk about what this blue line is. That is the supply dynamics behind HBAR. So this blue line here is a rough estimation of the current circulating supply of HBAR. It's basically based on the current market cap and price. Market cap is defined as price times circulating supply. So if you divide market cap by price, you get an estimate of circulating supply, and that's what this is. And the exact value isn't all that important. What's important to note, though, is just the rate of change and how massively the overall circulating supply of HBAR has increased ever since its launch. When you start all the way down here at somewhere around 145 million, we're now talking about 33.6 billion HBAR that are in circulation. And that's important because it puts into context the price movements. So these other lines, this is just the HBAR price. I'm showing this on the weekly chart. This is the HBAR market cap. One of the things you'll notice is there's a massive discrepancy between market cap and price as we went into the bear market. Look at this. Price fell all the way back down to levels that it had only seen back in late 2020. But market cap didn't do that. Market cap stayed way higher. Why is this? How is that possible? Well, supply is so much higher that when you multiply basically the same price by massively more supply, you're going to get a higher value than you did back here. And the reason this is important to keep an eye on is that price is determined by supply and demand, right? That's just the basic formula. Supply and demand will determine the price people are willing to pay for anything. Well, for price of HBAR to get back up to its prior all-time high, there was X amount of demand at this level of supply that got us there the first time. But now we have a massively higher amount of supply, which means that we also will probably need a decently higher amount of demand to get us back to that same price. And that's why I think it's just important to keep this in context, where if we are indeed in a new early bull market and HBAR is going to appreciate as we'd expect it to, and as our models are saying, we think the price movements moving up makes more sense than down in the kind of short, medium, and longer term right now. A lot can happen in the short term, but medium, long term, that's pretty clear from the data. I think that that is a reasonable expectation. But if we're just going to anchor ourselves to the last cycle and think, oh, okay, new bull market, well, that means we'll easily get back up to the prior all-time high. And that means we'll easily go and put in multiples above that, like we did the last cycle. One of the caveats there is that that only makes sense if you think the amount of demand this time around is going to be massively larger than it was last time. Because the same amount of demand last time is probably not going to get us up to the same price because we have so much more supply on the market now. There's just more possibility for sell pressure. It's probably going to require more demand. And that might be fine. If your thesis on HBAR is that institutions are going to be piling into this, they're going to be building on it, there'll be all sorts of new demand vectors that show up for it, then that might not really be an issue. And that could then just lead to new all-time highs. Everything's fine. But if your thesis was, oh, I just think basically the same thing that happened last time is going to happen, there's going to be a lot of hype, a similar amount of demand is going to enter the space for HBAR as it did before, well, then just realize that you're probably actually targeting a lower ultimate destination for price than the last time around, given the supply dynamics. So that's just really important context for everything we've been talking about. Yes, it absolutely seems like HBAR is in a new bull market, and the data were very much telling us that the gloom and doom in the market was probably misplaced, especially down through here, and that up remained a likely direction for HBAR. But when we're ultimately then thinking about how high could it eventually go, it's important to keep in mind the supply dynamics. And just keep in mind, what is your thesis? If your thesis is there's going to be a massive explosion in demand, then maybe you're not so concerned. But if that's not so much part of your thesis, then it's just important to understand the implications of that based on supply. So again, not financial advice, you form your own opinions, but those are the things that I think are important to keep in mind. So to sum us up then, I think HBAR is showing some strength, and in some ways it makes sense very much coming out of this contrarian place where too many people were getting too doom and gloom about it. And it has more room to run, I think, in the medium to long term. But how high it could go is ultimately going to depend on how much demand you think there's going to be to offset that massively increased amount of supply. So if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates from our models and more over there. And go to our website, ParityDigital.io, to see live data from our models and more.